Hello, I'm Michael Glass from michaelglass.com, where we focus on making informed decisions about our financial future. Before we begin our video, you want to start off with our disclosures. Any symbols you see today should not be inferred as a trading recommendation. No matter what form of investing you choose, stock, forex, futures, options, they all have a level of risk associated with them. Any strategies we show today are for informational purposes only. Future results are not guaranteed. And finally, any investment decision you make is solely your own responsibility. Trade at your own risk. So this is our stock market technical analysis trading plan. In our video, we'll look at the past week's economic calendar and also look forward to next week. We'll see what happened as far as the most recent price action to identify key support and resistance price levels. We're going to look at the charts of the market leaders, Apple, Google, Goldman-Sachs, Priceline. We'll take a look at those. We'll look at the dollar, gold, and crude oil charts to see if there's any leading sentiment. And finally, we'll have an education spotlight at the end. As we look at the week that was, we can see that all three major indexes, the Dow Jones, the S&P 500, and the NASDAQ, all fell for the week, which puts the NASDAQ and the S&P further from being positive for the year. The Dow Jones is still up for the year, but the other two, the NASDAQ and S&P 500, are down for the year with, about a week left here. So we'll see what will happen here as we close out 2011. Key points of the week: the market did close down. Fitch did cut the ratings on several financial institutions across the world. Here in the States, affected by that was Bank of America and Goldman Sachs. Overseas, of course, there's still concerns over the stability of the euro and the eurozone. And remember, last week, the Friday of last week, there was this big euro summit to bring stability, and there was some positivity. But now there's concern on whether or not what they've talked about they can actually do. Also, we had some concerns come out of China that their data was showing a slowdown in their export growth, so their economy is slowing just a little bit. So that weighed down on the market. We did have some corporate news here. We haven't had some in a while. Of course, FedEx did beat on their earnings, but more importantly, Intel, a Dow component, issued a cautious outlook going forward. So that brought the market down a little bit. As far as our economic data, the big thing was the FOMC on Tuesday did keep their rates unchanged. They did say that the economy was growing at a moderate pace, so they changed their language a little bit there. Also this week on Thursday, our initial claims dropped to a 43-month low of 366,000. They were expecting 390,000. As we go into this week here, our holiday week, we can see there's nothing here on the earnings front. On the economic data, we kind of blow it all out on Thursday. Look at Thursday. We have GDP, consumer sentiment, and leader indicators all on Thursday. So that's probably like the big wow of the week. And then, of course, by then, after that, you're going to start seeing people take their money out of the market going into the holiday weekend. Let's pull up the charts and take a look. So here we are looking at the S&P 500 daily chart. And the most important thing that has remained constant, we talked about it last week and remains this week, is the resistance put in here by the 200 moving average. So once again, it held up last week, and here we tested it on Monday, and we fell off for the rest of the week. So, Friday. So the thing here is that where are we going to find our catalyst to get us above this? That's been the theme that I've been talking about for the month of December. FOMC didn't do it. Maybe DDP will. Of course, we have to remember at this point, a lot of our traders are taking their money out. But we can see that the 20 and the 50 moving average, I'm trying to hold as support. Also, this range of about 1220, trying to hold up as support. Where we're once again starting to see a nice little channel here, all the way down here from 1150 up to our resistance, our high of 1300. We'll have to see. The other thing we could do, depending on how you want to draw it, we'll come in and draw a trend line. You can use the wick here and draw it on up. So we get sort of an ascending wedge. Or we can use the close of the candle and draw it on over. Either way, it's about the same way. We got resistance of 1300. We've got this uptrend line from back in October. That's an ascending wedge. The market needs to resolve itself one way or the other. And we're putting in lower highs, so we may resolve it to the downside. But again, the key here is the 200 moving average. What's going to be our catalyst to get us above the 200 moving average, or are we going to go back and test the lows? Zoom out just a little bit. On our weekly, here we can see the week that pushed us right on back down. Now on a weekly, we're right at support of, again, that 1220 price level. We can see the lower highs that we've been putting in here. And we also can see that ascending wedge that we're watching here. Just seeing which one we like better. But what's important again is catalyst. We're in a wedge, 1300 at the top, 1200 now, a wedge. Which way are we going to resolve ourselves? Back out, testing some of our highs, or are we going to come down here and test the 200 moving average on the weekly? Indicators are all in the mixed range. Finally, coming out to the monthly chart. Zooming on in for you. And we can see the doji in for the month of November. And right now, of course, we're starting lower. Let's zoom in a little bit more. So we've got the 50 moving average acting as support. Indicators, again, remember the monthly have plenty of room to head lower. The monthly charts have plenty of room to head lower. So we'll have to, again, watch and see, are we going to have a catalyst that's going to hold us up, or are we going to go back and test some of our lows? Now, when we go back to our daily, come on over here and check out the NASDAQ. The NASDAQ has been a little interesting here. Let's zoom on in. Again, we can see the resistance of the 200 moving average, and we can see that the NASDAQ is actually in the lower range, whereas the S&P 500 is trying to stay above its range. The NASDAQ 2600 we're below that, so a little weakness there. So the question is, will we come and test this low here of 2430? Once again, we'll come out and grab our trend line. This one's not as bad, and we'll kind of draw it up. And again, there's our ascending wedge. There's our market. So we really need 2500 to hold up here while we try to find our catalyst to get above the 200 moving average. Indicators are blah. Come out to our weekly. Zoom in. And we can see this is sort of a mat hold, or even a morning star or evening star pattern where we gapped up, put in sort of a doji hammer, and now we're pulling back. So again, we can see that wedge that we're referring to. We need that to hold up for our bulls. Otherwise, we have to start thinking that we're going to retest the lows. Indicators are all in the middle, kind of heading down. So our indicators are sideways to down. We'll come out to monthly, get our last look here. And again, we can see indicators on the monthly have plenty of room to head lower. So our speech, our motto, our spiel, it's all the same. Catalyst. It's the end of the year. People are pulling their money out. People are going on their holidays. Is there going to be any catalyst that's going to get us out of this range? Or are we going to have to wait until early January to really see the market begin to trend once again? Okay, we are starting off by looking at the daily chart for Apple. And we'll zoom on in here. And we can see that we've kind of been in this big range between about 370 and about 410. And it looks like we're getting ready to head back down and test the 200 moving average here. I'm definitely seeing some weakness here. And again, notice that the market, the S&P 500, is battling to break above the 200. And here for Apple, we're hoping that 200 will be the support range. We can see here over on the market profile, although the point of control is 392, we can see the volume that has accumulated here at 380 to hopefully hold us up. However, we got an inverted hammer here, kind of a falling 3, falling 4 pattern going on here. Um, Certainly, if we break 377, we have to think that we're coming back down here to retest this November low. So that's definitely a price level to watch. But more importantly, Apple sideways to down. Amazon, we'll zoom in on here. And here, nice little hammer here. But we didn't get that fall through, even though we got a gap up above. This would be Tuesday. We're really putting in 2 dojis. So the market's trying to hold on to this 180 support price level. You can see it on our market profile where 182 is being the point of control. But really the 10 moving average, 20 moving average holding up as resistance. Some sideways action here from late November. Definitely sideways and down for Amazon. Google. The good news, we gapped up, we came down, tested the 200 moving average, had a nice move up from here. And, again, the good news here is that it looks like the market is trying to hold up here above 618. But, it's not bullish, but it's definitely sideways. I wouldn't say sideways to down. You can see the volume really accumulating here, 622 being the opponent control. So you can see we really need to get above 629, 630 to get back up here to retest the 636 high. But, so Google sideways. Goldman Sachs. Now remember from our opening, we talked about Goldman Sachs was downgraded by Fitch. Of course, Goldman Sachs is in a great downtrend, and it continues to put in lower highs. And now it looks like it wants to go back and retest the swing lows here. So 87 has been trying to hold up as support. And it certainly looks like we're getting ready to head down there and test that price level. So Goldman Sachs, I would say sideways to down. Notice that we have a couple stocks here retesting their lows. Where the market hasn't gotten down there to test their October lows, November lows, some of our leading stocks are. What about IBM? Zoom on in for you. IBM, sideways, maybe even sideways to down. We fell out off. You can kind of see with market profile. Here's our volume accumulation, and once we broke out of that range below 191, you can see we fell hard and fell even harder. That's a good example of market profile of these vacuum of where there's no volume. The market can move right through that. So we'll have to see 177, 178 here will hold up as support. IBM sideways, maybe even sideways to down, but I'll say sideways. Intel, we talked about them in the opening, about the giving us a cautious outlook. Okay, took a moment there to load, but in here we were in a little range, and now it certainly looks like we're getting a little bearish here, wanting to head on down here to the 200 moving average. I would say sideways to down for Intel. So we've got a lot of sideways to down and just 2 sideways. MasterCard, has survived all of the turmoil. And this one's definitely sideways. Maybe kind of like IBM. Maybe want to go sideways to down on this one. Nothing to write home about. Even though the larger chart as a whole shows this beautiful uptrend, definitely a beautiful uptrend, but right now I would say sideways to down, and I would say watch this 50 moving average to make sure that it holds up. Netflix, we know the story that is Netflix, but when we zoom on in here, resistance 75, support 61, 62-ish range, we're in the middle, sideways for Netflix, and finally price line. Huge range for price line. You can see 441 all the way up to 550-ish, 554. Huge range. When we zoom on in, you can see we just tested that range. The buyers found value here, and now we're coming back up. This 458 is where we found some support before, so I say if we can get above that, we may be able to come up here and test some of the other range. We may continue to be range bound with this one. I'm not going to say sideways or down because of this huge range and that this support of 443 has been tested and looks like it's holding up. In order for me to, we would have to see some more consolidation at this range for me to say sideways or down. So price line, I'm going to say sideways. Okay, so now we're going to look at some of our market sentiment leaders to see how they're helping us gauge the market. Starting off with the dollar. When we look at the dollar, I mean, we could see we kind of, and I know I have a very zoomed out look here because I wanted you to see where I'm grabbing this from as far as this resistance line. But we can see that the market um, over the past week here really shot up here. And of course, with the instability of the euro, the FOMC was, even though they kept their rate unchanged, they had some positive commentary about the economy with moderate growth. And so we really got that big move here for our Monday and Tuesday. And then we hit, again, that resistance level that we pulled off from way back. Now we pulled off back just a little bit. Now we can see on our market profile that if we get below 80.50, right around 80.50, I mean, it's really possible for us to come all the way back down to 79, which will be, should hold up as support, as that's our price level from before. So again, we need to watch 80.50 to see if we'll begin to start to fall right out of there. But overall, I mean, again, very strong dollar. Dollar very strong. We'll see what happens from here. So if we have a strong dollar, let's take a look at gold. And just looking at this visually, we can see one very key important thing. When's the last time gold was below the 200 moving average? Not sure when the last time is, but we do know that it is right now. We also could make an argument for an M pattern. We're certainly putting a lower high here, putting a lower high here. And once we finally broke through 1600, we really started to test some things out here. Now we've got this wick here, down here at 1534. That's something to watch. And of course, this swing low here is all the way down at 1485. So those are some price levels to watch. And of course, where we are right now, if we can get above these wicks, and more importantly, 200 moving average, we may get ourselves back into this range. But right now, it is very important to see that we actually did close below the 200 moving average for gold. At some point, gold is definitely going to be buyable. Finishing off with crude oil, we've been talking about this range of 102 down to 96 for a while. And then what's important about what happened right now is you see we closed below 96. So now we have to start watching 90. If we get below Friday's low, we have to start looking at the fact that it may go back down and retest 90. As we come to our education spotlight, we're moving on to trading journals. We've talked about plans, trading systems, trading rules, trading routines, trading schedule, and now we're talking about the journal. And again, the thing about trading journal is this: when you make a mistake, either by not following your rules, by misreading an indicator, and you make a mistake and you write it down, and then you come back and make that same mistake, as I say, fool me once, shame on you. Fool me twice, shame on me. And what we simply say is that you're costing yourself money by not learning from your past. That's the whole thing about technical analysis, remember, is that we believe that the past can help predict the future. So you have to take the time to document and write down what you've done in the past so that you can continue to review and sort of gauge the market and see how you're doing and making adjustment as time warrants, as the conditions of the market warrant. And more importantly, when you start to see your trading system, your setup, your rules start to not have the expectancy, the win-loss ratio that you're used to, you need to, go ahead and start making adjustments and backtesting other strategies if your strategy is no longer working in the current market conditions. So again, it makes no sense to cost yourself money. And that's, again, we got to talk about it. In the end, this is about your money. It's about your portfolio. It's about your capital. And this is about maximizing our profits. And so you have to take the time to look at your past trades and not make the same mistake time after time after time again. As you know, you can find us on Facebook, YouTube, and Twitter. Please take the time, like us, subscribe us, comment, let us know what you like. that you can see. Move Up with Mike on YouTube and Twitter, and we have a page on Facebook. Are You Financially Literate? Again, we've got some great things coming for you here in 2012 to make sure that we're giving our subscribers quality content. Really think you're going to like it. We've got a new channel called You Make the Call Stocks, where we're going to give everyday specific technical analysis videos on specific videos. We need your comments. We need your subscriptions so that we know which stocks you want us to cover. We're going to cover the big ones, but if there's some abstract or some personal stocks, we're going to look for viewer feedback to get that information. So again, please take the time to subscribe, comment, and like us so that we know what exactly to bring you here in 2012. We have our free 5-course video. It's all about higher probability trading, and it helps you learn how to frame the market. And we hope that it gives you the insight to who as coaches and how we can help you. One-on-one, develop that trader's mindset. Again, your trading plan, your trading system, your trading rules, your trading schedule, and as we talked about, your trading journal will help you set all of that up, personalized to you, so we are maximizing who you are as a trader. We've got our video course. It's got 3-part components. One video is all about the introduction to everything. Introduction to technical analysis, introduction to chart patterns, introduction to money management, introduction to trading, introduction to the numbers of trading, psychology of trading. We really cover the foundation, the building blocks of trading. And then our second video series, we talk about all the things related to a trading plan. How to choose the right trading plan, what components should be inside your trading plan. And then we finish off in a third video series on talking about different trading setups that you can use to be a successful trader. And again, great cost, only less than $100, because we don't believe that the system is what makes a trader, it's the mind. And we want you to have money to sign up for our coaching program. Of course, if you're trading futures, we got a great broker for you. Intraday margin as low as $300. And charting package work on both PCs and Macs, so you can find those latest and greatest stocks by using your scans and your filters. As we just said, it's not about the system or indicator, it's about the mind. It's about having the psychological capital to pull the trigger on your trades. A new indicator, a new system won't help you do that. Going through our coaching program will. Thanks, guys, and I'll see you next time.